Welcome. In this video, will ZBCN coin go higher? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. When we carefully examine the chart, we see that the price movements have started to progress in a very meaningful and distinct structure. Especially in recent periods, the fact that the price has formed a higher bottom compared to the previous bottom, that is a rising bottom, can be considered as a very positive signal from a technical point of view. Such rising lows indicate that the market is now finding buyers at higher levels and are often considered one of the first signals of a trend change. This is because it shows that buyers are now starting to move the price up without waiting for lower levels. However, in order for this uptrend to turn into a real trend, not only the lows but also the highs need to exceed each other. In the current situation, looking at the technical structure, we can see that the price is about to approach the previous top, and this level has become an extremely critical zone. If the price is able to surpass this current high to the upside, that is form an ascending top, then a classic uptrend will have begun, with both the lows and the highs exhibiting an upward structure. Such structures form the basis of the healthiest and strongest uptrends in technical analysis. This is because buyers are now as strong as sellers in the market, and the price reacts to every pullback by finding support at higher levels. In such a situation, investors open long positions with more confidence and do not hesitate to carry positions in the medium and long term. However, another important point to note here is that this top should not only be tested, but also broken with strong volume. If the price breaks this important resistance on weak volume, the breakout may not be permanent and the market may fall back below that area. But if there is a clear crossover with volume support, the breakout is likely to be permanent, and the subsequent price action could be much more aggressive. What traders should pay attention to during this process is whether the pattern is forming in a healthy way. If the rising low is strongly formed and the subsequent rising high is decisively broken, this represents a significant change in direction, not only on the short term, but also on the long-term charts. Such a pattern opens the door for traders to expand their positions or develop new buying strategies on a weekly or monthly basis. It is also noteworthy that the area of this formation is technically close to levels that have worked as serious resistance or supply zones in the past. If the price breaks through these zones, levels that have seen selling pressure many times before may start to work as support this time. In other words, past resistance becomes future support, indicating that the uptrend is on firmer footing. Putting all this together, we have the following picture. Price has now established a higher base. It's now heading towards a technically significant high that lies ahead of it. If it breaks through this high, both the rising low and the rising high pattern on the chart will become clear, and the first structural foundations of a classic bull trend will be laid. In such a scenario, price action is likely to not only be limited to short-term bounces, but also to enter a permanent bullish channel in the medium and long term. As a result, the most important thing to watch in the current situation is whether the price can break through the hill ahead. If a strong breakout comes, it will be a significant breakout not only from a technical point of view, but also from a market psychology point of view, and will lead investors to move higher with confidence. So let's look at other metrics so that the analysis is clear. Stay tuned. When we approach the chart from the Elliott wave theory framework, we can say that price action is currently in the third wave phase. This is an extremely critical phase in technical analysis, and one that needs to be carefully monitored. This is because the third wave is generally known as the strongest and most aggressive wave. This is when buyers' confidence grows, the price gains momentum, and most traders start to take positions. In the Elliott wave structure, the first wave often goes unnoticed. The second wave is a correction wave, and therefore some traders are still hesitant. But by the time the third wave begins, the market's direction is clear, and prices start to accelerate rapidly upwards as the big players come into play. This wave is therefore extremely important both in terms of momentum and investor psychology. In the third wave we are currently in, certain technical target levels come to the fore. According to Fibonacci expansion levels, the least expected range of this wave is between 1,618 and 2,272. These levels are based not only on mathematical ratios, but also on historical market data and trader behavior. So these are not just random numbers. Rather, they are reference points that have been tested and verified many times over the years. The third wave is usually measured relative to the length of the first wave and is technically expected to reach the ranges mentioned above. The price is currently moving steadily upwards within this wave structure. If this momentum is maintained and buying pressure continues, it is quite possible that the third wave will reach these targeted levels. In some cases, The third wave may even extend not only to the minimum level of 1,618, but also much higher, to 2,618. For the time being, however, the primary target area is the area between 1,618 and 2,272 according to the classical structure. These levels can also work as areas of psychological resistance, as many technical analysts and traders keep an eye on these levels and profit-taking may occur there. For the Elliott wave structure to work properly, it is important that the price moves steadily towards this target zone. Even if there are corrections in between, the main direction should be up for the continuity of this wave. If the price makes a sharp retracement and breaks below the level where the second wave started, then the Elliott structure is broken and the waves become invalid. However, in the current situation, the structure of the price seems to be far from this possibility. On the contrary, there are many technical signals that the third wave is continuing in a healthy manner. The most important strategy for investors at this stage is to take advantage of the strength of the third wave and plan short and medium-term positions well. Because during this wave, the price usually moves fast, creating an attractive period for both buying opportunities and potential profit margins. However, risk management should not be neglected, as markets are always far from certain and full of uncertainties. In conclusion, within the framework of the Elliott wave theory, we can say that the price is currently moving within the third wave. The least expected technical targets of this wave are the Fibonacci expansion levels of 1,618 and 2,272. If the price targets and exceeds these levels, a strong bull trend will be consolidated. Therefore, it is very important to follow this phase carefully and interpret the developments in accordance with the discipline of technical analysis. One of the notable technical signals on the chart is a negative divergence in the RSI indicator. This is referred to as a negative mismatch in the technical analysis literature and is generally considered a warning signal that should be carefully monitored. Negative divergence occurs when bullish peaks are formed on the price chart, while no movement in the same direction is observed on the RSI. That is, even though the price makes a new high and continues its ascent, the RSI indicator does not confirm the move and remains lower than the previous high. This tells us that although the price is rising, there is a weakness in the underlying strength. This is exactly the scenario we are facing right now. A new high has visibly formed on the price chart. The price has surpassed its previous high, giving traders a glimpse of hope that the uptrend is continuing. However, when we take a look at the RSI indicator, we see that it has failed to make the same high and remains below the previous high. This technical mismatch may indicate that the uptrend is not progressing in a healthy manner, that buying power is weakening, and that a possible correction is imminent. Oscillators like the RSI allow us to analyze not only the direction of the price, but also the strength and momentum of this movement. If the price is rising while the RSI is lagging behind it, this is often an early signal that the uptrend is losing momentum and a correction or pullback is likely in the short term. This kind of negative mismatch should prompt traders to both review their positions and take a more cautious approach. In conclusion, this negative divergence in the RSI indicator suggests that the buying pressure underlying the current price action is gradually weakening and the uptrend is showing signs of fatigue. For traders, this may necessitate revisiting position management strategies, tightening stop-loss levels, and considering profit realizations if necessary. Although the trend is still up, such mismatches should not be ignored and should be carefully monitored as they are among the leading signals of trend changes. RSI shows these mismatches very well. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.